most of the stuff that we're consuming is shipped either through Federal Express, UPS, the post office. Think about all the online commerce. Everything that you buy on Amazon, on Walmart, all that stuff is shipped. And FedEx had a pretty big miss. They missed on the top line. They missed on the bottom line. And in fact, year over year, there was a decline, an actual decline in their revenues. Now, I'm sure that over the last year, FedEx has raised its prices. I mean, everybody's raised their prices. But despite that, they're actually doing less in nominal sales than they did before. And so this should, throw cold water on this parade that the economy is in great shape. Because the fact that a lot less stuff is getting shipped is an indication that maybe the consumer is running out of gas, right? He's tapped out. He's leveraged to the max. He has all this credit card debt. People are starting to have to pay their student loans again that people haven't paid.
Peter Schiff highlights concerning signs in the economy. He points out that major shipping companies like FedEx are experiencing declines in revenues, suggesting a potential slowdown in consumer spending. Despite widespread price increases, nominal sales are not keeping up, indicating possible exhaustion among consumers. Schiff also notes a poorly received Treasury bond auction, usually a negative signal, but the bond market surprisingly rallied. The day concludes with the Dow Jones and Nasdaq experiencing significant losses, hinting at a potential financial crisis on the horizon. Schiff's insights raise questions about the true health of the economy, urging viewers to stay vigilant amid these warning signs. Let's dive into the video to hear his full thesis.
But the other indexes were going up despite this news. And then we got more bad news that the markets shrugged off in the form of a really bad Treasury bond auction. Even though you've had this big rally in the bond market, this auction was very poorly received by investors. And that should have hurt the stock market, but it didn't. In fact, it didn't even hurt the bond market. The bond market rallied. Normally, you get the kind of news like this, that there was a very sloppy auction with a big tail, there wasn't a lot of demand. You would expect the bond market to get hit. Bond market went up anyway. So it might, be an indication that there's something else going on here, that the bonds are still being bid. I mean, maybe there was some sense that this stock market dump was coming, because that's exactly what happened late in the day. After making a new all-time record high, the Dow Jones finished down 475 points on the day, and that's 1.27%. Bigger losses in the NASDAQ. No, actually, the NASDAQ was only down 1.3%, so about the same. It was the Russell 2000 that had been the star. Even though it hadn't hit a new all-time record high, it was, making more headway into 52-week highs. The Russell 2000 was down almost 2%, 1.9% on the day.
In this next segment, Peter Schiff delves deeper into the market dynamics, highlighting a concerning shift in the recent highs of major indexes such as the Dow Jones, S&P, Russell 2000, NASDAQ, and NASDAQ 100. Despite reaching new highs, these indexes closed significantly lower than the previous day, marking what Schiff identifies as ominous outside reversal days. He explains that such reversals, especially after a prolonged bullish trend, could signal a potential market top, raising the specter of a correction or even a more extended downturn. Schiff attributes this market reaction to the Federal Reserve's backtracking on rate cuts, suggesting that the initial optimism surrounding lower interest rates may be giving way to a realization of deeper economic challenges.
But what's more significant is that all of these indexes, the Dow Jones industrials, although there's not that many industrials left there, but the Dow Jones, the S&P, the Russell 2000, the NASDAQ 100, these indexes made new 52-week highs, or in some cases, new all-time record highs. But not only did they close negative on the day, they closed well below the low from the previous day. And I've talked about these type of days. These are outside reversal days. It's when the range, you expand on the prior day's range by going above the high and below the low. If you close below the low after trading above the high, that is a reversal, an outside day. It's outside because you went outside the prior day's range. And it's a reversal because you started off higher and you went lower. And when these days are particularly significant is when there's been a big trend and you make a new high. So it's not just an insignificant day that happens to take out a high and the low of the previous day. It does it following a string of highs. The market was going higher day after day after day after day. Relentless string of gains. Kind of really, for December, this was very rare that you would have this many days. I forget how many, but all these consecutive up days in the market. And then all of a sudden, you get this reversal where the market just collapses. The sellers came out in droves and there were no buyers. And so not only did we close below the prior day's low, we closed well below the prior day's low, and we closed on the low of the day. And so that potentially is a very ominous technical sign that we've seen a top. Whether it's a short-term top or a longer-term top, it's hard to say. I mean, it could just be the beginning of a correction, right? Not necessarily a new bear market where you see the market's down 20%. But it could be the beginning of a correction. And I think that the reason that this is happening is because of all of the backtracking that is now finally caught up to the markets with respect to the Fed and its commitment to deliver these rate cuts. Because ever since Powell let the cat out of the bag and basically conceded that rates are coming down, and they're coming down substantially, the markets, got ahead of it. And in fact, I think the mood on Wall Street was, happy days are here again. We're going back to zero. We're going back to QE, because that is the experience of the past. I mean, once the Fed starts cutting, they don't stop until they get to zero. I mean, that's what they've done in the past, right? And so why would anybody assume that the future is going to be any different? And in fact, considering how quickly Powell capitulated on rate cuts.
In today's deep dive into the financial landscape, Peter Schiff has painted a thought-provoking picture of potential economic challenges ahead. From the unexpected decline in shipping activities to the ominous reversal days in major market indexes, the warning signs are becoming more apparent. As we navigate through these insights, it's crucial to stay informed and vigilant about the evolving economic landscape. If you found this analysis intriguing, don't forget to subscribe, like this video, and hit the notification bell to stay updated on the latest financial discussions. Your thoughts and opinions are valuable, so share them in the comments below.